Hi guys, welcome to today's class. Today we are going to see cost accounting under accountancy and bookkeeping, right? Cost accounting. What is a cost accounting? Yes, it's a branch of accounts only, but it deals with only the cost, what is involved in the business activity. Cost means literally it is expense. What money or what expense you have done for your business. That is called cost. All right. Cost means simply the meaning is expense. The money what you have incurred. It may sometimes it may be denoted by losses also, which means what you have incurred, that is called as cost. And that is a branch which deals with this type of accounts is known as cost accounting. All right. So it deals with what various things, it collection of data, analysis, how interpretations, everything, and we can just check out whether our cost is controlled or not, which cost is more, where it is more. So by studying all these things, we call that branch as a cost accounting. So it helps us to determine which, for example, production part is there, administration part is there, selling part is there. So where we are incurring more cost, where we are incurring more expenditure, is that useful, is it giving any benefit out of it? So all those things, how we get to know only when we are analyzing the particular sector or particular section. So cost accounting helps us to do all those techniques. All right. Next one, management accounting. So nowadays we are talking about various types of accounts, financial accounts, management accounts, cost accounts. So now we saw cost account is talking only about the cost incurred in the business, how much ever you have incurred. Then what is management accounting? This management accounting is nothing but it is an information system that helps the management to understand what is the position of the business, what is the status of the affairs of the company. And that type of accounting or that which helps that is called as management accounting. All right. It takes data from everywhere. It takes data from financial accounts. It takes data from cost accounts. It takes data from everywhere, and it just it just organized in such a fashion that it gives the information to the management. Management means the entrepreneurs who's doing the business. It gives them to how what is the status of the business to take a decision. Usually it facilitates the management to take a decision. So management accounting means which facilitates or which helps the management to understand regarding the performance of the organization. Performance means both the ways, guys. It is either in the operational activities or in the way of financial. That is, how well efficiently the company is running, how effectively the company is running. So all those things, it helps. Which one will give them? Management accounting will tell them this is the status. All right. So cost accounting will talk only about the cost part, whereas management accounts, it takes details from everywhere, not only cost. It takes details from revenue, it takes details from financial sectors, everywhere it takes details, and then it just to give a statement, or it just facilitates the management to take a decision. All right. So this is all about management accounting. Next one, if I compare both management versus cost accounting, as I already told you, management accounting, it's for the top management people or the supervisory levels, where they plan activities, where they try to control things. They just based on the information provided by cost accountants, based on the information provided by the chartered accountants or the financial accountants, the management people will plan. They will set up the objectives for the organization. They set up the program or financial plan for the organization. All right. It utilizes all the techniques, which whether it is costing or financial, it takes everything, guys. That is called management accounting. If you see, it will take cost accounting like marginal costing, direct costing, standardized costing, all right, budgetary control. They use various techniques to understand the financial and the effectiveness and efficiency of an entire organization. All right. And that is called management accounting. right? But whereas cost accounting talks only about which one? Cost part, quantitative part. It won't talk about qualitative analysis, but management talks about both quantitative and qualitative. How well effective also, efficient also. Both the things will be discussed under management. But whereas under cost, it talks only about which one? Quantitative aspects. We believe only on the quantitative aspects under cost accountancy. All right, this is the difference between management and cost accounting. This little technical jargons we will move ahead, because we will be using this in our future lectures. All right, first one, cost object. What does it mean, guys? Object means for what you are incurring those expenses, then that is called as cost object. For example, product line. Suppose you are manufacturing a product. Suppose I'm manufacturing a biscuit, means then biscuit is my cost object. To manufacture that biscuit, how much cost I am incurring for that. All right, I will buy atta, I will buy sugar, I will buy butter, all those things I'll buy, right? So all those are cost parts to manufacture what? To manufacture one biscuit. That biscuit is called as cost object over there. It can be either biscuit product, or it can be either service, or it can be any customer, particular point of, particular level of customers, or a brand, anything for that matter. All right, so that is called cost object. Next one, cost units. Units means number of units. We say measurement, I can say. If I want to put it in a simple language, I can say that measurement. How you are going to measure it? Few I will measure it in terms of numbers. Few I will measure it in terms of, kgs. Few I will measure it in terms of liters. So we in costing, we always use cost per unit, cost per unit. What does it mean? Per unit means one single, that is called, that can be either of the things. It can be kg, it can be a ton, it can be liters, it can be numbers, it can be dozens, anything for that matter. So when I am measuring, it is nothing but measurement of the output. How you are going to produce your output, and how you are going to measure the cost for that output. That output ka measurement is called as cost units. For example, if it is a power, means kilowatt we will measure. Gas means cubic feet we will measure. Automobiles means car industry we will measure 1-2 units. Numbers we will measure. Alright, if it is a hotel industry, we will measure by rooms. How many rooms are there? How many rooms are occupied? How many rooms are vacant? So we will go by rooms. If it is a restaurant, means we will go by how many meals went, how many meals I have sold. Alright, so it is based on that. Correct? So it is a measurement. It is a unit of a product. How we are going to measure it. That's it. Next one, cost drivers. All right. Next one, cost drivers. Cost drivers means, guys, driving means what? Just making you to move. That is called, it's called driving, right? So drivers means which increases your cost, or which varies your cost based on a level of an activity. All right. So which increases. That is called a cost driver. See here, an activity responsible for cost occurrence. Because of that, I will have the cost. That activity is called as cost drivers. All right. For example, if I say, suppose if I want to produce simple, we will take, I want to produce a car. All right. Now, when I produce a car, I will say, how will I produce? First thing, I have to buy the raw materials. That is one part. But how many times I will buy the raw material? Purchase orders. How many orders I will buy? Now I need labor. How will I pay the labor? Based on their hours they work. If the hours worked is more, obviously the wages will be more. If the hours work is less, then the wages will be less. So hours spent will be what? A cost driver. Okay, for each industry, they know what is the cost driver. Cost driver means which affects your level of cost. That particular activity is called as cost driver. Which activity will influence your cost, will vary your cost, will affect your level of cost, then that is called as cost drivers. Few industry will be something, other one thing will be a cost driver, other industry one thing will be a cost driver. It is not same for all the industries. It will be unique based on the industries. All right. So basically, when it is a labor intensive industry, then the cost drivers will be hours spent, hours of the labor hours will be the cost driver over there. All right. So it based on the industry, which industry it belongs to. They have a, these are all the, they will already, predicted and kept, this would be my cost driver. So again, what is a cost driver? The cost driver means it is an activity which influences your cost or which makes your cost to occur. Then that item is called as cost driver. All right. Next one, cost center. Guys, it is nothing but cost center means what is it? It is to whom you are going to allocate that cost. That is called cost center. Based on what, for whom you are spending, right? It is a small group or it is a small segment. I can allocate the cost. For example, I tell you, suppose if I have I have branches in all over India, then what I will do, I will divide north, south, west, east, right? North India, South India, West India, and East India. I segregate. So that is a cost center. That is one group. South India is a group. All right. So I can do like that, or I can put a product wise, I can put a cost center. For FMCG, this much is the expenses. For suppose I have various product lines. All right. So suppose, say, for example, I manufacture various things. So now each thing I can put it as one cost center. All right. Cost center means it's a group of activity or it is a smallest segment. Yeah. And I will just for particular segment, I will allocate this cost to them just for the proper understanding of my financial status. That's it. It can be based on location. It can be based on person. It can be based on anything for that matter, whichever you are grouping it out. All right. Basically, for example, they'll go by location, geographical location. Say if suppose they have branches all over Karnataka, then cost center will be Bangalore, Mysuru. So they will change like that. All right. Suppose if it is in Tamil Nadu, means they will basically their cost centers will be like Chennai, major cities will be there over there. All right. Coimbatore. So all those will be the cost centers. Correct. So whatever is happening, whatever the expense is happening in that particular area will go and sit in that cost center. Just to analyze, suppose if the management wants to know how much I spent for this Karnataka branch, means then I will have a cost center called Karnataka. Then in that Karnataka, I will be having all the expenses. It can be labor, it can be material, it can be advertisement, anything for that matter. But it will go on. If I put the cost center name, I will have all the expenses. I can report to my management. This is the expenses I incurred for Karnataka. So because Karnataka is my cost center. So it is a group. It is a small group or small segment where the responsibility or where the cost will be accumulated. All right. So that is called cost center. These cost centers are for reporting purpose. All right. Now we'll see. Next one is allocated or apportioned cost. All right. So what is meant by allocated and apportioned cost? We'll see that. Allocated means I would have incurred that cost towards what? Towards which group or towards what I have incurred that I will allocate that cost to that particular cost center or particular item. Apportion means it is a whole expense I would have incurred. Generally, I would have incurred, and then I will divide this expense among the various items. I'll tell you an example. For example, suppose in a factory, I have in a factory. Yeah, what happens here in a factory? I have, I have 3 layers. All right. One is for example, one is the manufacturing of shampoo. All right. And one is manufacturing of shampoo. One floor I'm manufacturing shampoo. The another floor I'm manufacturing, say, for example, soaps. All right. And another I'm manufacturing, say, what else we can do? Any other item, say, for example, all right. I'm manufacturing cosmetics. All right. Now what happens here? Now I have this three products I'm manufacturing. Now each product product will become my cost center. Shampoo is one cost center, soap is my cost center, and cosmetics is my cost center. Now, I purchased some raw materials, all right, that I will be using for both shampoo and soaps, all right. Now, what will happen? I bought 100 kgs. All right, I bought 100 kgs. Out of that, 75 kgs is towards shampoo and 25 kgs is towards soap. So I allocated 100 kgs I bought for 1000 rupees. So 750 is towards shampoo and 250 is towards soap. I have just given this, right? So this is allocation because directly, it related directly to the cost center. There is nothing much. I'm not doing anything. It is just a cost incurred directly for that particular item. So I have given. But what happens? I have a mark, or say for example, instead of marketing, I'll just tell like this. I have a security guard. Yeah, for entire factory, I have a security guard. All right. Now I have around some 5 to 6 security guards. For them per month salary would be, each security guard will be 20,000, means 1 lakh rupees I will get. So in a per annum, I may end up with 12 lakh rupees for security guard ka expenses. Now what will happen? The 12 lakh has to be segregated among these 3 products because I have these 3 products, right? So then that expenditure, that what will I do? 12 lakhs divided by 3. So each product, each cost center will get what? 4 lakh, 4 lakh and 4 lakh. Each cost center will get how much? 4 lakh, 4 lakh and 4 lakh. Why? Because this is not incurred directly for these cost centers, but it is a general expenses I am apportioning among these things. All right, I'm apportioning. So that is the difference between allocated and apportionment. Allocated means it is general, it is particularly towards the cost center. There is no apportionment here. Allotment of whole item of cost. It is towards, incur towards that. So I'm allocating that cost towards that. All right. But what happens? Apportionment means I have incurred generally. Yeah, but I have to divide this. Somebody has to share this. No, on whose head I will put this? Correct. So I will put on all the 3 heads. I will put this expenses. All right. So that is called apportionment and allocated. All right. Hope you understood these technical jobs. All right. Next one, objectives of cost center, objectives of cost accounting. So now, first one, what would be the first objective? Ascertainment of cost, guys. Why I am doing this? I want to know how much I incurred for manufacturing one. Suppose I'm manufacturing a pencil. All right. Now I should know how much I incurred to manufacture one pencil. Why you want to know that, guys? Then only you can keep your selling price. Then only you can make sure how much profit you have earned. Otherwise, it becomes very difficult, guys. Without cost, you cannot determine your selling price, right? Suppose, for example, to manufacture one pencil, I incurred, say, 3 rupees. How much I incurred? 3 rupees. Now I will say that at least so much effort I have put, I need a profit of, say, 1 rupee or 1 rupee 50 paise I need. All right. Now what will happen? I'll keep 1 rupee profit. Now what will I say? I need profit of 1 rupee and I incurred to manufacture that pencil is 3 rupees. Now, then what should be my selling price? How much I should give it to the customers? Then if I sell it at 4, then 3 rupees towards cost it will go and 1 rupee towards me, that is profit I will earn. So my selling price, my basis for my selling price is coming from where? Coming from my cost. You're getting it? The main objective of the cost accounting is ascertainment and fixation of selling price and profitability. All right. Based on your cost only, you can fix your price, selling price, guys. Without knowing your cost, you can't keep your selling price. Haphazardly, if you're keeping your selling price, you may end up in loss of sales. How? Means suppose you will be pricing too much comparatively to your competitors and people won't buy your product. All right. So many things are involved here. Next one, cost control. Of course, if I know what is happening in my factory or what is happening, where the cost is leakaging. Leakaging means what? Where it is overflowing, where my cost is going beyond control. Those costs I can control it. If I know that, yes, here I'm just, now nothing. You earning money, all right? 1 month at the month end, you are not having any paisa in your pocket. right? What will you do immediately? What happened? I earned so much. Where and all money has gone? You will say, okay, I saved 10,000 rupees. I put it this one FD. I purchased in Amazon. I purchased in Flipkart, and I ordered in Swiggy for 4,000. You will understand. No, so then what will you do? Oh, the Swiggy order is unnecessary. 4,000 rupees I should not spend in a month. That is not correct. Yes or no? So you will find out which is not necessary, which can be controlled, which can be curtailed in the future period. So how will you know that? Only when you are accounting for that. Otherwise, you won't be able to do that. So cost control is the major objective, one of the other objectives of cost accounting. Next one, cost reduction. As I said, once you understood where is the cost and everything, you try to save your cost. How much ever is possible, you will save your cost. Now we will check, okay, Swiggy I bought for 4,000 rupees, means next month I try to reduce it, and I will cook from home. I will have whatever is having simple cooking I will do. Well, you will do all those things. Now in your personal, in your day-to-day life, you will do that. That is called cost reduction. Savings in a unit cost is also a cost reduction, guys. If you switch off the power every time when you get up and get off, then that will save electricity. So every unit, every cost saved is a savings, cost reduction. It leads to what? Cost reduction, right? So that it will be, how will you know that? Only when you know that cost has gone high, I want to reduce it. If you don't have that idea, or if you don't have that knowledge that your cost has gone high, then you wouldn't do that. Guys, take for example, when you are paying your electricity bill for your house, every month you will be paying 700, 600 or 900. One month it came to 1,300. Immediately you will check why the cost has gone to 1,300. Then you will analyze. Correct. Now, without even knowing that 1,300, you keep on paying. Means last month was 900, this month was 1,300. You don't have that knowledge only. Then how you are going to control it, right? So to have that knowledge, to keep the control in place, you should need which one? Cost accounting in place. All right. These are all the objectives of cost accounting. Next, I'm moving on ahead with techniques. We will use various techniques which you will study in the future lectures. Standard costing, marginal costing, absorption costing. This we will study in detail in a separate lectures, guys, because we have a separate topic regarding this. Standard costing, it is nothing but you will have a standards. I have to produce 100 units this month. That is my standard, means I will set a standard and I will compare it. It is like a budget. I will put a budget, I will do that activity, then I will compare. Correct? So that is all about your standard costing. Marginal costing talks about additional cost because of additional output. Because of I'm producing one more unit, what cost I will incur further. That is called marginal costing. We will see everything in detail later. Absorption costing, it is nothing but when we talk about that apportionment, that is called absorption. Which activity has to be given how much? That was handled by absorption costing. That is ascertainment of cost after they have been actually incurred. That is nothing but apportionment. All right, apportionment of cost or allocation of cost also I can say under absorption costing. Which activity will absorb that cost? All right, so that is absorption. Next one, differential costing. This helps in the decision making, guys. Suppose I'm doing one project, new project is coming in. I have to incur additional cost for that project, whether to take up that project or not. How I will do that decision making, that differential costing will help me to do that. It is a various technique, guys. How you have various formulas in your maths and in your science. The same way we have various techniques to understand or to make decisions in the cost accounting. All right. So first one, what we saw is marginal costing, standard costing, absorption costing, differential costing, and uniform costing. These are all various techniques used in the cost accounting for various purposes. All right. Standard makes you to understand what is your real performance versus standard performance, actual performance versus standard performance, where you are deviating, what is your problem, which went wrong, where went wrong. All those things you will understand from standard costing. Marginal costing, because of this additional production, how much you have incurred and how much you have earned, whether is it good to do that or not. So that is marginal costing. Absorption costing is nothing but I have spent the money, I have to give it to the products what I have manufactured. So which products will absorb how much? Is it right or not? Again, that was handled by absorption costing. The same way, differential costing. When a new project is coming in, can I take that or not? So it helps in decision making. And uniform costing, what does it mean, uniform costing? It is very simple. The rules and the principles, the method of costing I follow will be the same. If I have various branches, all the branches I follow the same method of costing. Or if I have various types of various locations or various offices, I have various undertakings, but I will follow same method of costing. This helps in the comparison between inter-unit or inter-firm. All right, so that is called uniform costing. Uniform means what? Same. All right, so it is same. Just I wanted to compare myself whether I am good or bad. So when can you compare, guys? When something is similar, you can compare, right? So that is called, suppose if one industry, then in that industry they will follow the same method of cost accounting. If suppose if you are a textile industry, then what is the practices followed in a textile industry, that only you will also follow. All right, so you may follow in this industry, this is the way we will maintain books. You would have heard all those things. Now then what is it? That is called uniform costing. Why they are doing it? Because they wanted to compare themselves. In due course of time, what will you tell? You will compare with the number one service provider. See, his income is so much, my income is so much. He earned this within 9 years, 10 years or 11 years. I will also earn this much in the due course of time. How can you tell that? Only when you and him are in the same methods of accounting. Otherwise, it won't happen. No. Then that type of costing is called as uniform costing. Next, there are various elements of cost, guys. Cost includes various things. All the expenses I told. Under that way, I mean, if I want to name a few, which is very important thing, material cost, it is a very important thing. Material, raw material. All right, all the materials. All right, whatever I consume to manufacture that product. Suppose for biscuit means material will be what? Atta, all right, or maida, butter, sugar, ghee. All right, all those things are what? Materials. Whatever the raw materials, ingredients going inside the final product, then that is called material. Labor cost. Labor cost is nothing but wages or salaries. How many people involved? How many workers involved? Whatever the remuneration you paid to your staff, that is called labor cost. And other expenses, we have already seen overheads. I hope you would have heard this word in our previous lecture. We have told overheads costing. All right. Overheads means other than the direct cost, which is directly related to the production, whatever the other expenses, say for example, factory rent, electricity, fuel, then transport charges, advertisement charges, commission, all those things are what? Other expenses. All right. All those things are other expenses. Now, based on that, I can divide the cost into what? Direct cost and indirect cost. Direct cost means which is directly related to the production of the product or services. All right. That is called direct cost. For example, material and labor all directly related to the production. Whereas indirect cost, if you ask me, I will say advertising expenses, packaging expenses, marketing expenses, commission, all right, electricity expenses, security personnel ka salary, all those things. It is not towards one particular unit of product. It is towards the entire organization. Is that clear? Any cost which you can trace it to one particular unit of product, then that is called direct cost. Because of this production of this one unit, I incurred this cost. Then that type of cost is called as direct cost. Other than that, it will be called as indirect cost. I hope you understand. Next, I can summarize this in the form of direct materials, indirect materials, direct wages, indirect wages, direct expense, indirect expense. It is very simple, direct and indirect. All right. Now, classification of cost or types of cost, I can say. Based on nature of expense, if I want to divide, I can divide as direct and indirect. As I already explained, nature of expense, if it is straight away to one particular product, if I can pinpoint that this expense is towards that particular product, then it is a direct cost. When the expense is incurred generally, and then it is called as indirect cost. All right. And based on functions, functions means what? Various activities the organization will do. Out of that, what? For your understanding, I can say that production or manufacturing, administration, sales, yes or no? HR. You have various departments in your company, right? Production department, sales department. What is that? Function. It is what? Function. So based on function, I can classify as production cost, selling cost, administration cost. Production cost, I can say that, material cost, labor cost, power, electricity or power cost. Then if you ask me administration cost, then I can say telephone expenses, internet expenses, and then what else you can say salaries paid to the finance manager or office staff, all those things administration cost, or security personnel, sales cost, selling and distribution, sales department, sales function. Then what you can say advertisement expenses, marketing expenses, sales promotion activities, exhibition expenses, discounts given to the customers, all those things where it will come selling. All right. R&D, research and development, obviously you will be having, every company you will be having what cost? R&D cost, research and development, patent, copyright, buying, all those things will be coming under R&D. So based on the functions, if you are dividing the cost, then you will have production, manufacturing, administration. So either I can divide it on the based of nature of expense or on the based on functions. We have still more based on variability. What is variability? Based on its ability to change. Fixed and variable cost. Basically, I can divide one to major thing is fixed and variable cost. And one more thing we have semi-fixed or semi-variable. Both the things are right. We used to semi-variable only we will use, but I have given you here semi-fixed also. Both are one and the same. Semi-fixed or semi-variable. Both are one and the same. Fixed cost or variable cost. What does fixed cost? How much ever the output is, the cost will not change. Say for example, January, February, okay, my output, what I produced, January I produced 1 lakh, February I produced 50,000 units, March I produced 30,000 units. All right. Now what happened? Rent paid for the factory where I am, rent paid is 50. Guys, tell me, in the month of January, you produced how much? 1 lakh. And how much rent you paid? 50,000. In the month of February, how much units you produced? 50,000. How much rent you paid? 50,000. March, how much unit you produced? 30. Rent paid what? 50. Guys, whatever the output you manufacture doesn't matter. My cost won't change. Then such a type of cost is called as fixed cost. Fixed cost means the cost will not vary with the levels of output. Then such costs are called as fixed cost. Is that clear? Classic example for that is rent of a factory, because even if you shut down also you have to pay that. Yes or no? Suppose April month you shut down. Do you need to pay the rent or not? Of course you have to pay the rent. It's very simple. You are staying in a house. All right. You are staying and your college or your office is leave. Now you are going to your native or to your parents' place, or you're going for a trip. 1 month you won't be there. Now, will you tell your owner that 1 month I won't be there, I won't be paying rent to you? No ways. He will say, whether you are here or not, you have to pay me. Otherwise, vacate my building. Yes or no? That is what he will say. Whether the output is there or not, whether the output is 1 lakh or 2 lakh or 30,000 or zero, doesn't matter. You have to pay me the same rent. Say, for example, January month, I manufactured 1 lakh. So what I will say to my owner, wow, I manufactured too high. I will give you 70,000 rupees rent. Will you say that? Obviously, no. So that type of cost is known as fixed cost. Variable cost is just the opposite of your fixed cost, which varies with the level of output. What does it mean? I'll tell you a classic example. Suppose, say for example, we take a simple example so that you can understand. I'll take biscuit only. To manufacture one biscuit, I need 1 gram of atta. I need how many grams of atta? 1 gram of, say for 10 grams we will take. To manufacture one biscuit, I need 10 grams of atta. All right. Now, January, February, March. All right. I manufacture 100 units of biscuit, 100 biscuit, 50 units. And here it is 80 units. All right. 10 grams of atta is said 10 rupees. 10 grams of atta is how much? 10 rupees. I repeat, one biscuit requires 10 grams of atta, and this 10 grams of atta is equal to 10 rupees. Now, if I want to manufacture one biscuit, I have to incur how much rupees? 10 rupees. All right, that is my cost. All right. Now, for 100 units I manufactured, how many 100 biscuits I manufactured? Now, how many grams I would have bought? 10 into 100, 1000 grams. 10 grams, 10 rupees means 1000 grams, how much? 10 into 1 unit, or I can put like this. For 1 unit, 10 rupees means for 100 unit, how much? 10 into 100,000. Next, February month, how much I produce? 50. So 1 unit get 10 rupees means for 50 units, how much? 500. Here, 80 units. So 1 unit 10 rupees means for 80 units, how much? 800. Now, if you see here, what is happening, guys? When the outputs are changing, your cost are changing. Yes or no? Then this is called variable cost. The cost which varies with the level of output, then that is called variable cost. All right. Then what is the semi-variable cost? Guys, it is a mixture of both. What does it mean? If you see your electricity bill, or say, for example, you have a landline. If you classic example, I can tell you, if you take a landline bill, there will be a monthly rental charges, which you won't change for all the months, it will be same. If you take January, February, March, whatever it is, they will charge you some 100 rupees, fixed monthly rental. Plus, whatever calls you make, based on that, you will get the amount. Suppose if you make 10 calls means you may get 10 rupees. If you make 20 calls means you may get 20 rupees. If you make 30 calls means you may get 30 rupees. So what is happening there? There is some fixed portion. All right. Along with that, there is some variable portion also. Then together we call it as what? Semi-variable cost. Your classic example is your landline bill. If you take your landline bill, there will be a monthly rental, say for example, 100 rupees will be there. Jan month, February month, March month. All the months it will be 100, 100, 100. But if you say phone call charges will be, you made 10 calls in the month of January, then 10 into 2, each call will be 2 rupees, means 20 rupees. Suppose you made 30 calls in February month, so 30 into 2, 60 rupees. You didn't make any calls in the month of March. You didn't use your phone only, then 0. Now, what will be your total cost now? Here it will be bill now amount 120, 160. Here it is 100. You're getting it? This is your total expense, right? But there is a combination of something called fixed portion and something called variable portion. And such type of cost is called as semi-variable cost. So based on variability, fixed, variable and semi-variable, we can classify. This is an important aspect in cost accounting. Next one, basis of occurrence. How frequently the cost will occur. One can be normal and abnormal. This normal means what? Buying, purchasing, material, labor, all those things are normal activity. Abnormal, fire occurs, loss on, say, a theft, stealing, robbery. All these are abnormal cost for us. All right. So basis of occurrence. Next, based on time also, I can divide the cost. Historical or current cost or future cost. All right. I can, based on 3 periods, historical or actual cost, predetermined or future cost, I can say whatever I have incurred now, or historical, whatever I have incurred earlier, and whatever I'm going to incur. So, or based on the time period also, I can classify the cost. All right. These are all the introduction to cost accounting, elements and technical jargons, and various types of cost. I hope you understood the cost accounting. It is just an introduction, guys. All right. We will see the elaborated concepts in further